Welcome, everybody. This is the Thursday evening Viper Trading webinar. If you are here to learn about trading the futures markets using the Viper tools, you are absolutamente in the correct place. Tonight's topic is developing patience to wait for the trade to come to you. A very timely topic that we're going to cover, and I think everybody's going to like it, so make sure you stick around and catch all of it. This will be recorded. And after it renders, we will get it up on the web tomorrow, so everybody can. You have to just if you have to leave early, some folks are coming in late. You're gonna miss some of it. It's okay. It'll be up on the web. You can watch the whole thing tomorrow. Okay, so let's knock out our standard disclaimer. All communications from Viper Trading Systems are for educational purposes only. Futures trading does involve risk, and there is a risk of loss. Nothing contained in this webinar or other webinars, including the live trading room, are to be construed as investment or trading advice. And of course, everybody in here does know that you do trade at your own sole discretion. So the term patience, waiting for the trade to come to you, what does that mean? You know, you hear those terms sort of bantered about, particularly a lot in the trading circles. Patient, you got to develop the patience. You got to wait for the thing. What does all that mean? Patience. What are we talking about? What does that have to do with anything? I mean, maybe it's just a waste of time that we didn't bring the thing up at all. Patience, whatever. Sure. What does that mean to you? I'm referring to the team here tonight. Everybody in here, we got a great turnout here tonight. What are we talking about? Why do we even have the topic of a webinar for patience? In fact, here's what I'm going to do. I'm going to ask you a question that might illustrate my point as I shift to a crude oil chart, as you're pondering the answer to that question. Now, don't Google it. Don't Wikipedia it. Most of you, of course, know what the term patience means, but I'm going to ask a question. And here's how I'm going to start off. And I'm not trying to stump anybody. Okay, this is not intended to stump, but I want to sort of drive my point home with a few quick questions, and we're going to see how you answer it, you collectively as a team here tonight. And then we'll step back a little bit and try to answer the question of what, in fact, patience is when we are referring to trading. Okay, you ready? All right, here's the first question right here. Now I'm going to do a series of yes or no questions to kick this off, but here's the caveat. You're only getting 5 seconds to answer each one. Are you ready? 5 seconds on the clock. These are yes or no questions, so you're going to type in a Y for yes, boop, an N for no. Ready? Question number 1 coming at you right now. Here we go. Teed up, ready to go on crude oil. Question 1. Is this a buy? Well, Bhaskar, you can't type yes, and I haven't even asked the question yet. Jumping the gun a little bit there. Okay, so here's a question. All right. Focusing on the right-hand side of the chart right here, is this a buy, yes or no? Should you buy the market? 5 seconds on the clock. Type in a Y for yes, you would buy. N for no, you would not buy. 4 seconds left. Right here. I'm circling with my cursor on the crude oil chart right here. Yes or no? Is this a buy? Would be yes. Buy? No would be in. 3 seconds. 2 seconds. Simple Y or an N. And the reason I'm doing 5 seconds, everybody, is because as you train your trading mind to become accustomed to seeing the charts, some of you are brand new. It's okay. You're going to learn, right? What we're teaching here is really important stuff, right? Really important stuff. It might seem simple on the surface, but it's really important to your trading. Anyway, 1 second and the time is up. Is this a buy, yes or no, right here on crude? 1 second. Time's up. Let's see if everybody got that right. Thomas, Bhaskar, David, Dennis, all knows. Byron, Mario, good to see you, Mario. Davin, John, Ed, Weldon, no. PW, Jim, Kathy, no. You're not seeing the chart? You should see the chart there, Jim. Here, everybody sees my cursor moving around, right? Cursor? Yeah, okay. You might have to log back out and back in, Jim, if you're not seeing that. Kathy, Chris, David, Chandra, no. Randy, oh, we have one buy from Ken. Okay, Bashkar, no. Brian Thomas, everybody in no. Everybody see. Oh, you see the chart. Okay, good. All right, the correct answer was no. This is not a buy. So this harkens back to the topic that I had on Saturday. I think it was Saturday morning, of getting to know what in a market is called a thrust and retrace. Well, first of all, let me back up and let me set the stage for this. Stand by. Okay. So as I said earlier, on the surface, this seems like a pretty simple question. You might say, well, okay, Charles, you are pointing to this candle right here. Here, let me blow it up a little bit so we can focus on the candle that I was speaking about. That one right there. In fact, I'll circle it like such. These candles right here was the focus of the question, right? Now, in order to answer that question on these two candles, and I'm on the edge of the chart, so I can't engulf the second candle, but you can clearly see it's a doji candle right here. The answer is slightly more complex. And here again, it harkens back to the topic I had on Saturday. And what you have to look at is the overall picture of what the market is doing to correctly answer that question. Now, I see most of you in here, over half, maybe 2/3 of you got this right. And so here's how this works. Clearly, you can see that crude oil, as of this point of the day, this is 9 o'clock until about 11:30, so about 2 hours, that we were in what we call an uptrend. So an uptrend is marked by a series of pushes up, which is the thrust direction up for an uptrend. And then the retracements are called pullbacks or retracements, where we actually take trades. So thrust, retracement, green background, predominantly blue bars, not all blue, you get some yellow, right? Mid-band and all the bands are stair-stepping up. And so this is an uptrending market, and we are what we call retracement traders. Here's another thrust right here, taking out that swing by just a couple of ticks. Yes, see it? I'll talk about trade entries in just a minute. Stick with me here because I'm sort of flying at the 20,000 foot level at a conceptual level now, so we're all on the same page. We'll circle back to trade entries in a little bit towards the middle, towards the end. That's not where we're going right now. What we're doing is trying to conceptually wrap your head around what a market's doing, because you can't really, it's hard to see and take trades until you get a concept of the bigger picture. And furthermore, added to the fact that we do have that new indicator come out with the alerts. Everybody's excited about the alerts. That's the best thing since sliced bread. That's like getting your birthday in the middle of May. I get it. Everybody loves it. But you notice that there's all manner of things to turn on there, right? Mid-band long, mid-band short, this, that, and the other, and all kind of things to turn on. So, all due respect, if you're not certain about what the market's doing in terms of uptrending, downtrending, retracement, etc., then when you put that thing on there, you're not going to kind of know what to turn on, right? So it's important that you know this. Let's continue on. Here we have another example of a thrust off the mid-band bounce. Here we have another retrace with a mid-band bounce. So that's arguably 1, 2, 3 pullbacks, right? And so, well, you can argue that this is a pullback too, so we'll give you that one too. However, when you look at the location of these bars, they are in the midst of what could be argued as a thrust. Furthermore, you can make note of the fact that the thrust is located at or very close to an established resistance level. So the important takeaway from this first question here, and this really speaks to the whole patience issue, is that it's really, really hard when you first start looking at a chart and you see the trend is up and you see the market is heading up like such. And this is a fair statement, I think, in a question for most of you, isn't the natural inclination to pull the trigger and want to get long here? That's only natural. You can say yes. I know. Hey, I'm not a robot. I'm a human. When I log into the room in the morning before the equity market opens and I see that crude, ES, Russell, and whatever, gold, they're all up near the highs of the morning. I'm a 20, 25-year trader. I still want to pull the trigger. It's natural. It's natural. It's only natural to think that because fear of missing out. It's going to break and run without me. It's never going to pull back. I'm not ever going to have a chance to get it. However, you have to fight that. You have to fight that. Okay, so this was definitely a negatory. This is not a buy because it is the tail end of what's called a thrust in an uptrend. And we more or less, I don't want to say never, ever, ever a million times, but rarely, extremely rare that you would buy this. The only condition you would buy it would be if the market's just on a complete tear and there's no pulling back at all and you put an extremely tight stop on it, but that's very rare. Okay? Good. Now, let's run a scenario out to find out for those of you who said, yes, I do want to buy on that candle, Mr. Charles, man, and there were a couple of you. There was a couple of you said you wanted to buy up here. Let's see what happened. If you had bought on that candle, that doji candle right here. So theoretically, you pull the market trigger order. Now, most of you said no, but there was a couple of yeses in there, so you got filled right here. Middle of that doji. Maybe you got a 10 or 15 tick stop, so your stop's sitting down in here somewhere, depending on your fill, right? Your initial stop on 1 or 2 lot. Hopefully you only put 1, but maybe it's 2 lot. Uh-oh. 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 You're feeling some pain. You're feeling some... Uh-oh. Uh-oh. Oh, oh, no. Oh, no. Oh, no. Oh, no. Oh, no. So let's do some quick math. With a 15 tick initial stop and you were filled at, say, 76, your stop is down here at, I don't know, 60, 61. So here you're getting popped out on a full stop out on 1 or 2 lot, 15 ticks. Ouch. On a 1 lot, that's $150 loss. 2 lot, that's $300. Ouch. Now, what's the problem here? What does the market do right in here? What's it doing right in here? What is this? What is this right here? Anybody? Question for the team. What is this? What is happening right there? What is that? Anybody have any idea what that might be? What could that possibly be? Anybody? Those couple of yellow candles and a couple of little red candles kind of sitting in that little band right under the midband. What the heck is that thing right there? I'm referring to this little box I just drew right here. What is this called? Anybody? Now, if you're brand new, don't worry about it. You might be looking at this like a deer in the headlights, like, what the heck is Charles talking about? I'll explain all this in a few minutes. For those of you that are seasoned, have been in the room and you're traders, you know what that is right there, right? Yeah, it's a mid-band trade. No, I wouldn't call that a phantom just yet. Okay, just to be clear, a mid-band trade is defined as bars that are more or less within these 2 bands, and more particularly, sitting on the mid-band itself. Okay, because we have these bands. We have 1, 2, 3, 4 bands above it, 4 bands below. The middle band is located right here, the thick line in the middle. That's called the mid-band for those of you that are completely new. We like retracements to the mid-band in a trend because there's enough meat on the bone to get back to a swing. Normally, the distance between here and the outermost band is somewhere around 20, 25 ticks. So if you're in a trend and you bounce off of here, there's enough meat on the bone to make some money, right? In this case here, we go just slightly below it. This is still a mid-band trade by our definition, because we are still in the confines of the band above and band below. That's our definition of a mid-band trade. So this meets the definition of it. Now, the trader who took this market order at the doji candle took a full stop out right here, 15 ticks. That particular trader, male or female, is licking their wounds, feeling pretty bad because they got popped, realizing that they pulled the trigger in the wrong spot because they bought the apex of a thrust move in an uptrend, right? And so as they're licking their wounds, they're realizing that they're panicking. Next thing you know, the actual trade you should have taken sets up right here. And look what this thing turns into. Gagonga. What the heck is that? What was that? That's the run of the morning right there. Now, follow-up question. On this box right here at the mid-band, was there another chance to get in, yes or no, or was the box the only shot you had? 5 seconds on the clock. That's a yes or no question. Was there another chance to get in the long trade on crude if you had missed this box? Was there a secondary opportunity? And that's a yes or no question. You don't have to say where it was. You don't have to say what it was. It's just yes or no. Was there another chance if you missed this initial box entry, yes or no, to catch this big, beautiful, honking, total beautiful run? 3 seconds, just a Y or an N. Yes or no, was there a secondary shot? 2 seconds. 1 second. Cast your vote, team. To the extent you participate in this, the quicker and the more you learn. Trust me. All right, good. Time's up. Yes, yes. Now, look, markets don't always do this, but a lot of times they do this ABC pattern, right? You see this all the time. A. So here's an initial small thrust in the trend direction, which is up. We get B leg back, bipping slightly into the top end of where the prior box was located. Now, this would not have taken your protective stop out if you took the initial box. You felt a little bit of heat, and I'll explain that in a second. Could you have reboxed it here and actually taken that trade if you had missed here? Yes. In the case of the first box, if you had boxed it just like I have shown here, using the Object Trader tool, the semi-automated Object Trader tool with a region box, you would have been filled long on the close of this bar right here. Market order fire, targets deployed, stops deployed, right? In the case of the second box, which is your secondary entry off the ABC pattern, you would have been filled long on the close of that bar right there. Market order, long, targets deployed, stops deployed, and you can even engage the trail stops as well. So that's what we call an ABC pattern. C being the follow through in the trend direction here. Now, some of you said 1505. Who was that? Kathy. Was that a tertiary or third opportunity to get in? And the answer, very astutely, Kathy, is yes. There was another one right here. Could you have boxed that little two popper on you? You know, technically, kind of what you had here was an A, B, C, D, E follow through the upside. So you are correct, Kathy. Yes, that was a third shot at the moon ride, and you would have been filled long on the close of that bar right there. 3 shots to get in. Everybody, I think, but a couple of you got it right. The initial question was, should you be putting a market order here at this thrust? The answer was no. Everybody sees that, and now you see the reason why. So when we talk about the term patience, what we are talking about is that you have to be very sort of, how would you say, observative of the market conditions. A lot of traders I know, they'll just sort of, you know, there might be some of you, still have sort of a, you know, I don't want to say it's lackadaisical, but more of a willy-nilly approach in the fact that, you know, I'm going to pull the trigger. Look, market's going up, right? Sure, it's going to pull back a little bit, but, you know, I don't care. It's overall going up. I can get in wherever I want. Well, the fact of the matter is, it really matters where you get in. Now let's talk about what this trade turned into. How many dollars did this long trade make? Let's take let's take one of these entries here. Let's use a round number, 6160-ish. Say you're filled, let's use a round number so I don't have to do a bunch of calculations here. And I don't know, you get stopped out at, this thing kept going, didn't it? Look at that. I don't know, you had a trail stop using stealth in line 6, which is the thin green line on the top of band number 6. This is called line 6. And I don't know, you got out at 62.30-ish. How many ticks is that, anybody? From here to here is how many ticks, and how much is crude oil worth per tick? Anybody know that off the top of your head? I got my money back. I got my money back. There you go. If you took a couple of pops, there's a chance of making a little bit of money. 61.60, 62.30, and how much is crude worth per tick? So if I was going to write down how much this trade was worth, it would be how many ticks. I'll help you out. Looks to me to be 70 ticks, right? So you had a long trade, and we're saying it was worth 70 ticks. Plus or minus, depending on your fill. If you took the third box, it'd be a little less. If it's the first box, it'd be a little bit more. And less, a little bit of slippage. And then I'm going to put a multiplies times how much per tick. I got to put a number in here. What is it? Yeah, some of you got it. Okay. Who got it? Who got it? Jim, TP, Davin, Bashkar, Byron. You guys are all on it, right? Rich? Yeah, $10 per tick. So this trade with a one lot, which is one contract, would have been worth approximately $700. Good. Less commission, of course. It could be your one and done. How many of you would be at or close to your trading goal with a one lot trade of $700? Would that be your one and done? Would you be done for the day with that trade? What do you think? If your trading goal for the day was $500, well, the obvious answer is one trade for $700. Yeah, you're done, right? Now, if if your goal is $1,000 a day, you could think about taking another trade. You put a 2-lot on there, that's 14 bones. So even if you had $1,000 goal for the trading day, well, then that you would have been done with the 2-lot. Yeah, 2-lot would have put you at 1,400 if you rode the whole thing up. Excuse me, pardon me, sorry about that. Now, we do have another way, and I'll explain this real quick, and then we're going to go on to another chart. If you put a 2-lot on, another thing you can do, I'll just quickly explain what this is you do what's called scalp. Let me see if I can explain this quickly and easily. Hypothetically, you were filled at 60, right? All right, so let's say you had a 10-tick initial, so you had 2 contracts. So in this case, your first contract, Object Trader would put the scalp target at 61.70, which is right in here. And so depending on your fill, 10-tick target would have been here. That's called a scalp. So for instance, if you're in the live trading room, you might hear that a lot, and we get a lot of questions from traders is, everybody says, oh, you got the first and then pull the scalp off. What are you talking about? Depending on the instrument, it can be from, now ES, you're going to want to scalp maybe like 4, 6, 8 ticks. Something like crude oil or a high flyer like NASDAQ, you can scalp 10 ticks. So in this case here, let me explain what we're doing. So we have a long trade in this scenario with 2 contracts, right? With 2 contracts. Okay, you pull 1 contract off. We call that a 1-lot, pulled off at 10 ticks times $10 per tick, right? $10 per tick. So our first contract yielded us a net of $100 less commission, right? And then the second lot, the 2-lot, second contract, if you will, ran the 70 times 10 is 700. So in this case here, that trader made $800. Mario, I'd be heading off to the golf course after that trade. Yeah, so now the important thing else to note about this is not only the target's achievement of the scalp, but in addition, the way we manage that is that once you're filled and you get the scalp off, you bring your trail stop up to within 2 to 5 ticks of your entry. Okay, so that's called a free trade, and then you engage the trail, and the trail catches the runner. So that's how we do that. Any questions? We're going to move on from here. What else do we want to see? Let's get another chart up. Anybody want to see Russell? Russell going once, Russell going twice. Anybody want to see gold? GC going once, going twice. Do I hear a bid for gold? Do I hear a bid for gold? What else? Type in what you want to see. Let me see. I got a whole lot of charts here. Let me see what I got in the back. See if we got some 8K Jones spice we can top into here. I thought I had a gold chart handy. Where the heck is that puppy? Oh, it's over here. Stand by. Gold? No, I don't see any gold. Well, I see one gold. A lot of ES. All right, let's tap into the ES-Aru, Esmeralda Sioux. We got hitched in Reno a couple of days ago. So she's officially my wife in the state of Nevada. She's been faithful and true and running quite nicely. Stand by, it's loading. Okay, we'll do ES first, and then we'll circle back to gold because I see some golds in there too. GC. Now, most of you know if you trade gold, gold's kind of a mixed bag of tricks. I mean, in the fact that some days gold can. Today was a good day for running gold. I mean, the gold was just run. You make some good money. Other days, not so much. There's days, of course, if you sit there, you can stare at gold all day long and thing moves like 12 ticks. It's a snoozer. You got to pick your spots. Let's go back to the open on ES. ES is the E-mini S&P futures. Most of you know that, of course. June contract, $50 per point, 4 ticks per point, $12.50 a tick. Let's look right at the open. We had several trades that set up, and then I'll also look at a trend reversal that occurred later in the morning with ES. So here again, I'm going to do the pop quiz for everybody. Are you ready? Is everybody ready for the quiz? 5 seconds on the clock. ES is the chart. Here we go. Question number 1. Should you sell ES right here? Yes or no? 5 seconds on the clock. Here again, for those of you, I see some late birds just coming in, we're doing a quiz where we determine where we are going to take trades. The topic tonight is patience, waiting for the trade to come to you. And we're focusing our eyes on the ES chart over here around 52.53. Is this a sell here, yes or no? 3 seconds left on the clock. Cast your vote. A Y for yes. Yes meaning yes, you would sell it here. An N for no. No, you would not sell it here. 2 seconds left. E-mini S&P futures. ES. They did come out with micros. Most of you, did you see they did 1.3 million contracts in 3 days on the micros? But I'll tell you what, we teach enough here where you don't need that mic. You can do the micros. It's supported by Ninja. It's in your list. They're good for practice because they're 1/10 of the normal value. So a tick is only $1.25 as opposed to $12.50. If you want something to learn on, very low risk, the micros are a good bet. 1 second left. Yes or no? Yes or no? Sell ES here. Time's up. Looking at the votes from the team. Byron, Davin, Rich, Brian, Kathy, Ken, knows. Eddie, Randy, Thomas, David, Jim, Chandra, PW, no. Oh, wait a minute, we got a yes. Okay, all right, I won't name names. Mario, Bhaskar, and TP all knows. We did have one yes. Now, why? Let me help you determine why this would not be a yes by advancing the chart. And then we'll circle back and discuss why. Ready? Here we go. Now, we're right at 6:08, so this is 22 minutes before the Equity market opens at 6:30 Pacific, 9:30 Eastern. Are you ready? I'm going to advance the chart. Uh-oh. 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 What happened here? Here again. Here again. Here again, right? In order to answer the question, should you short the market down here, we have to put the answer, we have to frame it in the context of what the market is doing, right? In this case, we can see that we are in the middle of a what we call thrusting move to the downside, like such. Background turns red. Midband and all the bands were stair-stepping down. We have a red stealth line, this sort of sneaky snake line right here. Bars are predominantly red. We were putting in a series of lower highs and lower lows. Swing levels from prior areas are broken. No question, we are in a downtrend. And so when you are in a downtrending market, the thrust part of the move is down. Let's go ahead and put that on the chart. So in a downtrend, and this could arguably labeled as leg one. Leg one is the initial thrust in the trend direction. So when you have a downtrending market, in particular the beginning of a downtrend, then the thrust moves are obviously down, in the down direction, right? In the down direction. Now, when markets thrust in a downward motion for downtrends, they eventually reach a point where they start to retrace. Now, when they retrace, why are they retracing? Is this a bunch of buying kicking in? Is the market going to start heading up now? Is this a beginning of an uptrend? Bunch of buy programs taking over. Algos are reversed. We're heading up now. What do you think? Yellow bars. That's a trend change right there. I'm telling you, that's a trend change right on. Look, it's going to come and break mid-band and blue bar all the way back up to here. What do you think? This little, look at that bounce right off of 52. It's like those buy programs know right where to get in. It's all programmed with the big boys. What do you think, team? Profit taking. What's profit taking in a down move? What is that? You know, I've talked to traders over the years who say, I just can't short the market, Charles. I only want to buy it. I can't sell a market. That's unpatriotic. I just can't sell. I said, well, you know, markets go up, down, and sideways. So what you're telling me is that if you're only buying it, then theoretically you can only go after 1/3 or 33% of the market. So you're not going to trade ranges. No, can't do it. Can't sell. I can't short it either. Well, then what are you left with? Short covering. That's right. So when a market has a thrust in a downtrending direction and you get the retrace, which is up in the case of the downtrend, right? That direction is up in a retrace, that this is called short covering, which equals profit taking on the shorts. So when you sell a market, you have to buy it back. And when you buy it back, it creates a natural updraft in the downtrend. So it's profit taking, short covering. It's no different than you do. Oh, we all do. Excuse me. Right? Let's say hypothetically, you know, whatever, you had some big old box up here and you're filled short. You know, this is all hypothetical, but you know, you're filled short on the close of that bar right there. You put a 1 or 2, 3, 4 lot, whatever, and you're tracking on down, tracking on down, tracking on down. You get all the way down here. The thing dropped from 64 to 52, 12 handles, 48 ticks, almost 50 ticks, right? 12 handles, 600, 6 bones a lot. That's bones is $100, right? When you get down to here, what are you going to start wanting to do with your contracts? I'll help you out. I'll circle it with my cursor. What are you going to do? Yeah, you're going to look to buy them back. You're going to be covering. You're going to be taking your profits. You're going to be licking your chops, making money on that big old short, right? And when that happens, it creates an updraft and hence the retracement in a downtrend. That make sense? Kathy says, I have a tendency to go long on that thrust down and always gets me deep into the doo-doo problem. Now, you know what? As Kathy, as crazy as that sounds, I'm not going to completely dismiss it, and here is the reason. Over the years, in all the hundreds and hundreds and scores of hundreds of traders I've known and traded with, countless numbers of traders, I know a lot of them who do that. So inherently, what she is saying is that when you get a thrust in a downward manner, she feels a tendency to buy here, particularly if she missed the short side. So in other words, what she's saying is, I missed this short, I didn't catch it, so I am inclined to buy this. Well, you only want to be buying it if you're already short and you're covering your shorts. That's the only reason you would buy it. You would not want to get long in a downtrend. That is a horrible habit. You need to really work on breaking. Yeah, that's called counter trend trading. That's going to get you in a whole mess of doo-doo. Yeah, you really want to you got to, the whole key that we spend so much time on is identifying the market trend. And you want to swim with the fishes. Those fishes are going downstream. You want to hop in that little puppy and you want to get in your little kayak and ride it downstream with the fishes. So buying here is definitely counter trend. Okay, good. Good. Almost everybody got that right. Let's do another one. Let's do another ES. Everybody sees this? Eddie says, I used to do that too, and it wiped me out many times. Yeah, you got to watch that counter trend trading. All right, stand by. I'm going to advance this chart, and we're going to do another yes or no question on ES. Is everybody ready? I'm going to clean this chart off, fresh chart. ES, I'm going to advance into, looks like about between 8 and 10 minutes into the market open and ask another question. Stand by, please. Cleaning off the chart. Chart is clean as a whistle. And I'm going to help you out. I'm going to give you a trade direction, so you don't even have to type in what that is. I will give it to you, and it's a yes or no question one more time on ES. Are you ready? Yes or no question, 5 seconds on the clock. Would you sell this market here, yes or no? Eyes focused on the right-hand side of the chart right here. Let me blow it up so the bars are super big. And for those of you that are new to what you're looking at here, I am in California, so I am on Pacific time. 6:30 is the open of the equity markets here in the U.S., 9:30 Eastern. You can clearly see that the trend on ES was down, indicated by predominantly a red background. Most of the bars are red. The market is stair-stepping down, and we are looking to short the market. So then once we know the market condition, the question becomes, where do we get in? 3 seconds on the clock. Is this a sell? Yes or no? Is this a legitimate short trade on this chart? Yes or no? 2 seconds left. Just type in a Y or an N. Y means yes, you should sell it. N means no, you should not sell this. 1 second left. Cast your vote, please. Think about the criteria we discussed for entry. The whole notion of patience, getting back to our topic here. Patiently waiting for the trade to come to you. Less than a second left. Cast your vote. Yes or no, sell the market right there. All right, time is up. Now, let me answer it in this way. David, yeah, is this recording of this webinar going to be made available to guests this week? Having computer problems and I need to take off. Yes. Gary should post this. We'll get it up on the web server tonight when it renders. And then usually after the room closes, Gary puts it up on both the membership site and the, what do you call it, the login area. And then he normally puts it on the webinar link on the website, so we'll talk to him in the morning. But yes, yeah, of course. Yeah, so okay, so let's go back here. So this was the thrust we discussed earlier. This was leg one of the push down. So here, clearly we went into the downtrend. This is the trade we looked at earlier where the answer to the question at the bottom of the thrusting market was no, do not sell here. And we found out why, because just before the market opened, of course, you get this beautiful retrace under the midband, setting up a very nice trade short just before the equity market opened at 630 right here. Like such. A little scalpy off, not quite to the bottom of the range there. Gary and I called and took this trade right here, short. You could have been filled on any one of these bars right here, depending on how or where you. We called it and took it in the live room short, and you can see here very clearly you went bound within a tick of the bottom to scalp some coin off, and then you stopped out here on the runner. We come back up, and so the question was, do you short this area? And very definitely the answer to our question was yes. This is a textbook mid-band short sell in a downtrend, right? Here you're kissing the mid-band. For those of you who just came in, the definition of a mid-band trade is the band above, the band below, and on the band itself. Here we can see the bars are right on the band, featured prominently in our trading entries. Occasionally they'll go into the band below, and occasionally they'll go into the band above. I took this trade with my live account, and so did Gary. Same with this one. And we went down. We come and we check that swing right here. And then look at what happens here. Does the swing hold 1, 2, 3, fourth time down? Does it hold? Heck to the no. You get a little bounce, and then she just rips on down, rips on down, rips on down, rips on down. 43.50, 43, stopping out somewhere right in here. Now, how much was this trade worth? Let's say hypothetically you put a region box using Object Trader at the area I've indicated here, and you're filled short on the close of that bar right there. Let's do some quick math. Your entry would have been short at 55.50, and you got out at, let's use round numbers. I don't have to calculate too much here. I don't know. Let's use something really round. Here, 55.50. 55.50 to 45.50. You know, some slippage in commission, it might be a little different than that. Maybe you got short at the mid-band, so it was a little higher. You know, maybe you got out down here 43, 43. But let's just call it 45.50 to 55.50. What was this trade worth? So we call it ES short for one contract. Went 10 points. Which is also 40 ticks, right? And how much do we say that is worth? How much is a tick worth on ES? Right, $12.50, 4 ticks per point, $50 per point. And so that equals on a one lot, one contract is 5 bones, yo. Now, just to put things in perspective, I took this short and I put a 2 lot on it, and I took this short and I put a 4 lot on it. I put a 4 lot on here and I wrote it all the way down to here, just like that. So you can do the math on how much I made on that trade right there. Right there. Right before 7 o'clock, I was pretty much done. Right there. 20 bones on that contract, on that trade right there. 2 lot on here, I think I made, let's see, we got, where did I get filled at 56. I pulled some off here. I put 2, I think put a 2 lot, peel one off here, and then I stopped out on the other one here. I can't remember. This is like a couple $100, couple $300, something like that. I don't remember the details of it. but it was good. Made some money. But this was the chicken dinner right here. Yeah, not your everyday trade. You know, you don't get 40 tick moves on ES very often. Some days when it's moving, you know, we get a lot of volatility because the whole China trade deal problem is blowing up in our face. Markets are running up, markets are running down, buy programs, sell programs. You know, we are capitalizing on that volatility. But when the volatility drops, you have to scalp the ranges, so you don't get these big moves, right? You don't get the big moves. Some days you get the big moves, some days you don't. Where you make most of your money is in the big runs on the running days, right? It's like a farmer, right? When a farmer's in the middle of a drought, is he making any money on his crops? Probably not much, right? Let's suppose that there's great weather and sun and rain, the crops are going like a bumper crop, 150% of normal. What's the farmer doing? He's cleaning up. Okay. All right. I don't see any questions on this. How do you close your stop at 48.43.50? Okay, let me explain how we did that. In fact, we were calling this out in real time as it was happening. That's a good question. Who asked that? Jim? Here. Okay. Actually, let me answer that. Let me answer it a couple of different ways. The types of how would you say, exits or targets that you have are a couple of, well, there's many different types, but let me just tell you the two main ones that I think are going to help you a lot. When you are in a big range, like right here, let me take this open line out. Everybody knows where the open is. Notice how you tend to get more of your V-type bounces. Why is that? Anybody? Why? Why do you get these V bounces in a range? You look at these ranges all in all these charts, and you come down, hit the thing, back up, hit the support, back up, roll over, hit support, yeah, it's all the way down. Why are you getting these V bounces in a range? Why does it do this? And while you're pondering that, why after a long run, why would a market just kind of sit down here like this? What is that? What's different about this type of bottoming type price action versus this kind of V bounce thing? What is that? Why is it doing that? Why do we need to know about it? Excuse me. Let me take a quick sip of tea. Stand by. What's going on here? Covering a lot of it. Support and resistance are holding. Well, couldn't you make the case that in a tight, well-defined range where you can clearly see the top and bottom of the range is pretty well defined, aren't market participants and the algos of the big boys, don't they know also where these levels are? Can't you make the case that everybody kind of sees and knows where these are, and so therefore, everybody's kind of, covering the short, roll over, short, cover short, roll over, short, et cetera, right? What's the difference when you get a huge run down where the algos, the sell programs take over? And by the way, that's exactly what this is. Don't kid yourself otherwise. Sure, there's market participants, but we're riding on the back of a whale. The whale is the big boys with their algos, right? So we're just, as I said on Saturday, we're barnacles. We're barnacles on the back of the whale, clinging like a barnacle. That whale's taking, that big old whale, he's swimming around everywhere, and he's going to the coral reef. We're just taking a little ride, right? We're trying to decipher which direction the whale's going. We latch on for as far as we can get, and that's what that is. Now, couldn't you make the case that the whale down here is trying to figure out what the whale wants to do? All these contracts, if I put a volume thing on here, I would bet money, big money, that there was a huge spike right here of volume when the sell programs kicked in big time right here like this. Let me see if I can illustrate my point. I'm not going to do it because we're almost out of time. Where the heck is that vertical thing here? Okay, I'm going to draw a line. There would be an enormous spike of volume short right here like this. Like that. And around it you would have all tiny little thing, it isn't over here. Next thing you have 100,000 contract, 200,000 lot. Boom, gagonga. Now, doesn't somebody have to buy all that back? Huh? This big spike? All these shorties flooding the market with their programs? So what's going to happen over here? Who's buying all that back? Another volume spike. And what's that going to create? The updraft for short covering, like we talked about earlier, isn't it? Right? That's what's going to happen. Look what happens. Yeah, that's the big money. That's the big money moving around. 1.5 million contracts a day? Sure. You want 500 lot on ES? Give me some more. 1,000 lot? No problem. Gone. Yeah, so that's what's going on. And so when you have all this volume that has taken a short position, and you're going to see the other volumes are going to look like this. Just for giggles, I might actually put that on there before we close. You're going to go down a little bit short, and now we get the covering, and you're going to see huge volume spikes, and it's going to push it all the way back up. Now, here, last question. It's 8 o'clock. Or 6 o'clock. We're going to get ready to wrap here pretty soon. If these bars, this is a yes or no, 5 seconds on the clock, and I'm going to hold tight on the 5 seconds, yes or no. Are these bars a trend change, yes or no? 4 seconds. Wiring in. Bars are blue. I don't know. We're above the mid-band, Charles. You said on the mid-band. We're short above the mid-band. We're long. 3 seconds. Yes or no? Blue bars, trend change. 2 seconds. Cast your vote. Why for yes, it's a trend change. And for no, it is not a trend change. 1 second left. Time's almost up. Yes or no, trend change. Blue bars above the mid-band. Time is up. Well, here, let's do this. I'll advance the chart, and then you answer your own question. Are you ready? Here we go. Are you ready? Blue bars. Let's see, we have 1, 2, 3. Byron, Rich, Davin, Mario, Kathy, John, all knows. Randy B, Jim, PW, Kent. We have 1 yes. Bashkar, no. Okay. Let's advance the chart. And you tell me now, as we advance, whether you think it's still a trend change or not. Uh-oh. Wait a minute. Wait. Blue bars above the mid-band. Trend change. Wait a minute. What's it going to do? Oops. It's closing below the mid-band. Blue bars still. Wait a minute. It's breaking support. Holy cow. It's all the way back at the bottom. What? What the heck is this? So do blue bars necessarily constitute a trend change? Yes or no? Here's some more of them right here. Blue bars. Charles, you said it. You showed me an uptrend before, and you said blue bars is an uptrend. How about all these yellow bars? Yellow bars mean confusion. Does that mean the market's confused? And blue? Why isn't this thing heading up? No. Did we not say over here 3 or 4 times in the course of this webinar, we have said, very clearly stated, that the band above and below the mid-band is considered a mid-band trade. In this case, the trend is down, and you are still shorting this market. The trend has not changed, notwithstanding the fact that you have yellow and blue bars. Now, look, I know for some of you, and I've heard this a million times, that it's a little bit confusing when the bars turn yellow and they turn the other color. It's understandable. But we have to understand the price action rules. Bar colors, I don't want to say they don't matter, but if you're coming up to swings and you're around the mid-band in a downtrend, you are still shorting it no matter what the bar colors are. Okay? That's a mid-band trade. Sometimes it'll be red. A lot of times it'll be yellow. Yeah. Now, what would have to happen for a trend change, Ken? Well, you would have to break. You'd have to see a pullback to a higher low, somewhere in here. Hypothetically, of course, obviously that didn't happen. And then you would have to come up to something like this and take out a swing, like a major swing like over here, like some kind of swing would have to be taken out to the upside. And even then, you probably have to wait for a pullback like that. Final quiz. Okay, everybody's done super excellent. We got total good AAA pluses and gold stars going all around here. Now, we talked a lot about the downside. I'm going to fast forward ES. This will be the last question and we're wrapped because we're running out of time. You tell me. Now we're going to do something a little bit different. Okay? I want everybody to get ready. This is the last thing. Make sure you stick around. It's really important, okay? You tell me when you think you see a trend change on ES by typing either the letter T in or TC for trend change. Are you ready? The bar colors, David, are just a function of the scripts that we have running. We have, in fact, you can change those. I can't, Gary can explain that in the morning how to do it. I'm running out of time here, so let's address that in the morning. But you can actually adjust that. Everybody ready? I'm going to advance the chart starting at 8:30 Pacific, 8:44 a.m. Pacific time. And when you think there is a trend change on the ES chart, you type in a T or TC. Everybody ready? Starting right now. Now, don't type in CC because I haven't started it yet. Here we go. 8:47. Remember, we're looking for a trend change on ES. 8:51. T or TC when you think you see it. 8:54. Now here, and let me pause. This is not necessarily when you would take a trade. That's a separate question. I just got to put that on the table because a lot of people confuse that. A lot of people think that trend change equal trade. That's not necessarily the case. Those are two separate events, if you will. You have trend change and then you have trade entry. So the question is TC trend change when you see it. Okay, right. We're right here at 8:57. 9 o'clock. 9:02. 9:06. 9:08. 9:11. 9:13. 9:20. 9:24. 9:25. 9:30. Okay, I'm going to stop it there. Now, it was interesting to see as the TCs rolled in where we saw the TCs. Now that you have the benefit of looking backwards from 9:30 all the way back to 8:30, would you change what you typed in? Would you change it? Or would you stay the same? So is this the trend change when it crossed right here? Or is this, when it broke that swing? Or is this the trend change when it thrust all the way up here and the background turned green? A or B? A or B? Well, now we see it. Okay, so you have the benefit of hindsight. It's hard to tell in real time, right? We all know in real time when the bars are coming in, we're armchair quarterbacking a little bit here. Good. B. Because at the time that this challenge to the swing occurred right here, let's go back as you looked at it in real time, you could make the case as these bars formed that you had really not taken this swing out to the upside just yet, right? Couldn't you make that case as the bars approach that swing level that it could, in fact, still be a downtrending market, right? You see that? However, when it breaks that, as it did right here, and it thrusts through it up to a fresh swing high just shy of 52, and the background turns green, and what starts happening to all of the bands in the midband? What's happening to all the bands in the midband as the market is doing this? Is it heading up through here? Is it heading up yet on the A question? This was the A question, the A arrow. Nobody typed in A, which is good. Yeah, it's flat and sideways. It's still sideways. You're in a range here, right? You're in a range. Now, when we break that range and we go up and we get a fresh swing and the background turns green, could you not make the case that this, in fact, is the trend change? So the answer to the question was when these bars formed right here. That was your TC moment. Now, follow-up quiz, and this is the last thing, and then I'm turning this thing off because I got to go. When you think you see a long trade set up, I'm going to advance the chart, reconstructing real time at 8:55 a.m. Pacific. You type in, I'm going to help you out. The trend is up, so we're taking longs only, right? And I'm going to advance it in real time, and when you think you see the long trade, you type in an L. Is everybody ready? This is going to see how much you're paying attention to patience and retracement. Here we go. Remember, long trades only. You type in an L when you see it. Here we go. 8:56, 8:58, 9 o'clock. Bars are real big here. 9:03, 9:04, 9:05. Still 9:04, 9:06, 9:06, 9:08, 9:09, 9:10, 9:11, 9:12, 9:16. Okay, I'm going to stop right there. Most of you got it. What did we talk about midband trades? Where are midband trades located? At or around the midband. By definition, our minds are attuned to the fact that it must be in this sweet spot strike zone down the pike on here, right here. Are these bars in the sweet spot right here? When these bars showed up on the chart, should you have typed in an L, yes or no? Now, of course it's yes. This is, now were you filled long? No. When these bars formed right here, could you have also typed in a long right here? Yes. Were you filled long on this one? Yes. Right here. Object trader box, long only, close of that bar. If you had not drawn the second box and extended this box over like such, would you have been filled long? Yes, on this bar right here. Anytime when these bars, these yellow bars, were forming in and around the midband like such, this was your long opportunity on the retracement off this fresh swing that occurred on the thrust move all the way up to 52 right there. Hey, listen, I'm going to wrap. I got one thing to say for everybody before I close out here. If you want to learn anything of extreme value from Viper Trading Systems as a company, as traders, software developers, teachers, and we trade ourselves, we trade our own money, we trade other capital. You can train yourself to pick an instrument or two, one or two is all you need, and master the midband trade like this. You'll pretty much make consistent money pretty much almost every day. I can't sit here and guarantee it. All conditions are different. You know, NASDAQ is a spazzy little thing. Are you going to make money on that mid-band? It's hard to say. But I can tell you on crude oil and ES, you will. Crude oil and ES, you learn mid-band trades, you will make money if you master that trade right there. Pretty much every day. And you hear it in the room. When we say, hey, you know, I'm just going to say, you know, Ken said I made $1,700 today. You know, Dan said I made $800 this morning trading crude. You know, Jim said I made $450 trading ES this morning on 2 contracts. We're not making that stuff up. You know, that's not just some random names out of a hat. These are real people, and people who've been with us a long time. And, you know, it doesn't take a long time to learn this. All you got to do is really learn, you know, just a couple of really simple setups, pick an instrument or two and master it, and you can make money. I'm going to turn the recording off.